Introducing Ausbiz Capital GrowWise, a new fund which combines institutional insight and experience with a target return of 15% per annum.
Our fund mirrors SciTech GrowWise, backed by an 18-year track record with historical 21% average annual net return. With more than $1.45 billion under management, the SciTech GrowWise Fund is led by award-winning global portfolio manager Ivan Sherman. The same strategy is now available to Australian investors from as little as $5,000. Discover Ausbiz Capital GrowWise, investing informed by experience.
This program is brought to you by LGT Crestone, local private wealth expertise backed by the stability of a global presence.
Hello and welcome to the Global View on this Monday. I'm Andrew Gagan. Great you can join us here at Ausbiz as we get across what happened on Friday and look ahead to the week ahead. Let's first start on Wall Street. Global equities were little changed at the end of last week as investors weighed positive corporate earnings, the ongoing tariff threat, with reports that US President Donald Trump is considering newer, harsher tariffs on EU products. Now on Wall Street, for the week, the S&P 500 gained more than 0.5%, I should say. The NASDAQ rising 1.5%. The Dow was little changed. Among the Mag 7, Nvidia was down slightly on Friday. The others in the green. And the latest earnings results, streaming giant Netflix fell more than 5%, despite the success of Squid Game helping the company surpass earnings forecasts, while it also lifted its annual revenue outlook. Charles Schwab advanced after posting higher profits, while Regions Financial shares jumped after raising its forecast for interest income. American Express beat second quarter profit estimates, but its shares fell. Industrial giant 3M fell after saying the impact of tariffs will mostly be felt in the second half of the year. The energy sector ended in the red, weighed down by SLB after it reported a lower quarterly profit and a downbeat outlook. And ExxonMobil slumped after losing a legal battle over Chevron's acquisition of Hess. Well, President Trump is reportedly pushing for a minimum tariff of between 15 and 20% in any deal with the European Union. That's according to the Financial Times. The president said to have been unmoved by the latest EU offer to cut car tariffs and would keep duties on the sector at 25% as planned. Meanwhile, the latest data out of the US shows inflation expectations fell, according to the University of Michigan Consumer Sentiment Report, with the 5 to 10 year measure down to from 4% to 3.6%, while consumer sentiment rose. And US Fed member Christopher Waller hinted that he would dissent if the FOMC committee votes to hold interest rates steady at its meeting at the end of this month, saying the private sector is not doing as well as everybody thinks it is. Most of the employment growth we saw last month was in the public sector, and that means the private sector is not doing particularly well. Well, those comments saw the US Treasuries rise on Friday, dragging yields lower, with the 10-year down about 3 basis points to 4.43%, the 2-year falling to 3.87%. And the US dollar slipped, but held on to weekly gains. The yen, it'll be in focus today, bearing in mind actually the Japanese market is closed for a holiday, but Japanese media reporting that Japan's ruling coalition has lost its majority in the upper house following Sunday's election, the bloc failing to win the 50 seats it needs to maintain control. And the Aussie dollar trading at 65.1 US cents. Bitcoin, it's at around 117,000 US dollars, with the crypto sector's market value having eclipsed $4 trillion over the weekend. This as President Trump signed a law to create a regulatory regime for the dollar-pegged cryptocurrencies known as stablecoins, which is expected to encourage mainstream use of digital assets to make payments and move money. Crude oil futures, they were little changed on Friday despite concerns about oil supplies as the European Union expanded its sanctions against Russia. Brent crude futures down around 1/3% at $69 a barrel. Copper rose 1.7%. Iron ore was up slightly to $100 a tonne. And gold gained on a weaker US dollar, and ongoing geopolitical and economic uncertainty boosted the demand for the safe haven. Spot gold at around $3,350 an ounce. Let's take a look at what's going on globally, particularly with a focus on the US. Greg Boland joining us now from Tiger Brokers. Greg, happy Monday to you. Welcome back. Good to see you. So, of course, the focus in the States at the moment is earnings. I guess that's also balanced as far as investors are concerned with that ongoing concern about how the tariff regime is going to play out.
Yeah, I think it's the overall tone of the Q2 earnings has been very positive. Many companies are threading the needle between very resilient consumer demand and rising geopolitical and trade pressures. The tariffs were once a background risk and now are being explicitly factored into forecasts and the results and the press releases or press commentary has been that the trade policy will play a much more prominent role in the corporate strategy, investors and sentiment heading into the second half.
Now, of course, earnings season always gets underway in the States with the big banks. What are your observations about their performance thus far, Greg?
Well, the big banks had very strong results. The share price didn't necessarily indicate that. The only one that sort of rallied on the result was Citi. The rest of them sort of was more mooted. But for example, JP Morgan posted a $15 billion profit, while Goldman's earnings jumped 20% year over year. So overall, the banks did pretty well, and all of them noted that the trading revenue surged in the quarter, which is not surprising given the very volatile start to the quarter at the Liberation Day, and therefore there's been a lot of trading and a lot of activity, both by equity trading desks and also the FIC desks, which is fixed interest currencies and commodity desks of the banks, and they've been very, very active and doing well.
Outside of the bank, any other notables? I just mentioned obviously Netflix having reported. What are your thoughts?
Netflix, definitely their revenue was up 15.9% year on year. They raised their guidance, and subscriber growth continues, but it got sold off. So even though these companies are reporting better than expected, same as 3M and others, they have been sold off if their forward guidance is affected by tariffs or by other issues.
Greg, what's your view on big tech at the moment? I guess the news outside of earnings was that from Nvidia last week, where it looks as though it now can sell those key H20 chips back to China.
Yes, well, so that was one of the big news last week. Jensen Huang, who's the CEO, came out in a conference in China saying that he thought that they would be able to put the chips back into China soon, whatever soon in inverted commas means. So that got the stock going and got the whole sector in the AI space going again, which was good to see.
All right, this week, as seen there, we do have Tesla and Alphabet coming up. What are expectations, Greg?
I think Tesla, it'll be interesting to see how they go in terms of their results. Predictions are the revenue will drop about 10.5% and adjusted net profit around 15%. So I think they will struggle, but I think the share price is reflecting the robo-taxi rollout, which seems to be going quite well. So it'll be interesting to see whether they say anything there. And then in Alphabet, expected revenues expected to be up nearly 11%. So that should keep the share price rolling and that whole sector rolling. So they both report after the bell on Thursday our morning, Wednesday afternoon their time.
All right, we might just go to the broader calendar of what is ahead. What's your pick? What are you interested in? Perhaps it's going to be a good indication of what's to come. I guess also a reflection of how the US economy is travelling at the moment.
I think definitely the results of some of these companies this week will be interesting. The likes of General Motors and Coca-Cola. Obviously, Coca-Cola is a big holding of Berkshire Hathaway, and that will be interesting to see consumer demand there, and things like Domino's Pizza as well. Airlines, I would say that they're doing pretty well, but a lot of people not necessarily travelling to the US anymore, and I see that Trump's trying to put in an extra $250 visa fee for non-immigrants coming into the US as well. So that will affect those tourist companies such as the airlines and hotels, etc.
Greg, also a focus on the upcoming Fed meeting at the end of the month. Now, I was mentioning there earlier, Christopher Waller, a noted dove, pointed to the fact he is likely to dissent if the committee decides to leave rates on hold again. That appears to be most likely given the pricing we're seeing at the moment. What do you make of that? I guess Christopher Waller seen as a potential candidate to replace Jerome Powell.
Well, there's definitely, there's a lot of toing and froing from Trump around whether he's going to sack Powell in the intervening time before his time is up in May next year, and whether he actually resigns ends up to him. But there's definitely a mixed response from the various governors who are basically saying even if Trump puts in whoever he wants to put in, there's 16 or 17 of us that vote, and even if the chair is a Trump puppet, then we won't necessarily be following his lead. So although this guy is saying that he definitely made dissent, well, he has done that before, so no surprise there. But it'll be interesting to see how the others vote.
So,
and definitely at the moment, they're still pricing in two moves this year, one in September, one in December, and probability of a move next week is pretty low.
Yep. All right. So, Greg, given all that, the macro outlook, what we're seeing in earnings, what's your view on where equities are likely to go in the States with both the S&P 500 and NASDAQ near their record highs?
Well, yeah, I think it'll be interesting to see whether they carry on in that first Trump term. In his first 6 months, the market rallied, and over that whole year, it rallied about 20%. And this year, it's interesting if you look at the graphs, they've just gone through the same sort of rise, even though we've had this huge kickback or pullback in April, May. The market is actually higher up than it was in Trump's first term, given the first 6 months. So it'll be interesting to see whether it continues to rally. And given the results that are coming in, which are good, it'll be interesting to see how the market continues and whether tariffs have that bigger a issue or a pullback on the various companies that some of them are talking about now. Although Johnson & Johnson's come out and said, well, our tariff exposure is not as big as we thought. It'll be interesting to see what other people report that sort of thing as well.
Greg, good to see what you're getting across stateside. Enjoy your week. Thanks for joining us in Tiger Brokers.
Thank you very much. Thank you.
Let's just turn our attention now to the local market. Just ahead of the open, it is expected to begin around 0.5% or so lower when we get going on this Monday. We'll get right across that in just a moment with Nadine.
This program was brought to you by LGT Crestone, local private wealth expertise backed by the stability of a global presence.